Michael James Burry is a physician as well as an investor and manager of hedge funds in the United States. He established and managed the hedge fund known as Scion Capital from the year 2000 until 2008, when he decided to shut it down in order to concentrate on his own personal investments. The fact that he was one of the first investors to correctly anticipate and capitalize on the subprime mortgage crisis that took place between 2007 and 2010 is what brought him the most notoriety. Today we will discuss Michael Burry's prediction about another crash. Michael Burry has made a variety of contrarian forecasts regarding markets ever since 2008, the year in which he correctly predicted the previous housing market crash. These predictions have all gradually come to pass. Because of Burry's almost obsessive behavior, which he attributed to having self-diagnosed Asperger's syndrome, he was already managing $600 million in 2004. This is the reason why, despite the fact that many investors sought him out to manage their capital, Burry rejected this money. Burry's compulsive habit, which was focused on identifying the finest chances, led him to examine hundreds of proposals on mortgage-backed securities. After doing so, he came to the conclusion that the real estate market provided an excessive amount of high-risk loans. He noticed that the real estate industry was handing out dangerous loans to individuals who were not going to be able to pay off their debts in the medium run. Even in those same reports, it was already documented that a lot of people were getting into trouble trying to pay their mortgages on time. Burry was able to recognize that this was a bubble, and he forecasted that it would pop in the year 2007. In his search for a means to capitalize on this circumstance and turn a profit, he was successful in persuading two significant banks to issue CDIs and sell them to him. When the great subprime credit crisis of 2008 and 2009 occurred, Michael Burry made a daring move that resulted in a profit of nearly $1 billion for him and his investors. As a result of this move, Michael Burry established himself as a financial visionary, which led to worldwide fame and financial success. Michael Burry has made it clear on multiple occasions that he considers himself to be a value investor and that he bases all of his investment decisions entirely on the margin of safety concept developed by Benjamin Graham and David L. Dodd. This is also something that he has stated openly more than once. The difference between the selling price of an item and its true market worth is known as the margin of safety. The purpose of this margin is to seek assets with an intrinsic worth that is higher than their current price, with the idea that over the course of a lengthy period of time, the asset's price will eventually approach or even surpass the price that is reflective of its true value. At the beginning of 2021, Burry took a stance contrary to the bullish sentiment that prevailed at the time. He forecasted that we would see massive inflation prints for years to come, and warned investors of an impending crash in the stock market, but no one listened to him. He then went on to caution against the enormous bull run that was taking place in the cryptocurrency market, warning investors that the problem with what was going on was the leverage that was being used in the markets, and warned that the mother of all collapses was coming. A fast forward to the present day reveals that, to everyone's surprise, all of his predictions came true. The stock market was pummeled throughout 2022 as a result of high inflation, and cryptocurrency dropped by more than 70% across the board. Huge players in the market were wiped out as a result of excessive leverage, just as Burry had predicted. According to Michael Burry, there are some primary factors that will cause a collapse that will make a financial crisis based on these factors. Michael Burry has gone and sold out almost all of his stocks. The first factor that Burry is extremely concerned about is sticky inflation. In a recent tweet, he said that inflation appears in spikes, and when the spike is resolving, it won't be because of Biden or Powell. Instead, it will be because that is the essence and nature of inflation. It resolves false people and then comes back. When it comes back, neither the President of the United States nor the Federal Reserve will take credit for it. What Burry is referring to is a situation that we have seen before, and is exactly what Burry is predicting will happen here in this really interesting setup. The analysts predicted a double-dip recession, but then they said to tell Sachs that we think these are the sharps. We believe that there will be a double hump in inflation in the near future, which means that it will go down before going back up. There are a number of reporting vagaries that may cause this, so it is important to keep that in the back of your mind. However, the good news is that inflation is going down. Basically, a federal judge stayed Biden's attempt to give student loan relief. That would have been a $500 billion transfer payment from the government into the hands of individuals. It is deflationary to not give that money to people. It is effectively taking stimulus away from people. It seems like a divided government is on the horizon for the United States. The United States of America made the announcement through the Wall Street Journal that they had essentially denied Ukraine's request for advanced drones. They also told Ukraine that they needed to go and negotiate an endgame with them as one of their demands. In July 2022, the White House issued a new definition of what constitutes a recession, despite the fact that the economy was in a technical recession, which is defined as 2 consecutive quarters of negative GDP growth. The unemployment rate was only 3%. This is an all-time low. In 2020, the unemployment rate was 15%. Therefore, a rate of 3% is extremely bullish for the economy. This was one of the main points of this act. The fundamental assumption is that there will not be any layoffs of workers because unemployment is so low and the economy is doing well. However, this assumption is dangerously incorrect. The unemployment rate is actually a very poor indicator of the true health of the economy because it is a lagging indicator of a recession. As a result, if the unemployment rate is at an all-time low at the moment, it will increase in the near future as the economy collapses. This is unfolding before our very eyes as we are seeing layoffs all across the board, with even historic layoffs coming from all of the big technology giants. The white-collar employment bubble is bursting right before our eyes, and the longer it takes for the redundancy to disappear, the more permanent the decline in employment will be. Working from home will in time be seen as a contributor to the problem. The approaching sky-high unemployment rates are going to affect the entire economy in a way that will be very difficult to predict. The most unsettling aspect of all of this is the fact that we are currently on the cusp of the largest bubble of margin in the history of the world. This predicament was best described by chief investment strategist Jeremy Grantham, who not only predicted the housing bubble of 2008, like Burry did, but also predicted the dot-com bubble of the year 2000. In a recent interview, he echoed the words of Burry on how this is going to be the largest unwinding of any bubble he has ever seen before. What do you think of our video? Let me know in the comments section below. If you enjoyed this video and want to hear from me again, be sure to hit that subscribe button before you go. Thanks for watching.